Yeah. And that's when I started being more interested and open to it. I actually had a couple friends start leaving in that 2012 to 2014 area, and they went to the other side.
Yeah.
And they're crushing
the dark
it.
side.
The
independence.
They're crushing it.
Okay.
Right.
Yeah.
So I was like, okay.
Yeah.
I think you and I had met
around
that time, and I think a lot of things that hold, a captive agent back is the reset, right?
Yeah.
Man, I got X coming in, XYZ coming in. I'm going to go to zero.
Right.
I don't want to go, at least I got 100K or 200, whatever's coming in.
Right.
And that's the big thing. And actually, that's what scared me the most, right? Is how do I know it's really better? And I want to start over. Right. Zero policy, zero clients. And I think when we chatted in 2014, I was interested in making the move, but my company rolled out a new program that was going to kick some funds into agency development and support.
I totally remember that.
You remember that?
I think you were going, hey, I want to go. I want to become independent. I think that's where I'm headed, but my company just rolled out like a new big bucket of money that I want to take advantage of and see if it resurrects my love for where I'm currently at or something like that.
I figured, I'm like, hey, I'm already here. If I leave, I'll never know.
Yeah. If this bucket of money would have made it all happen.
Exactly. So the thing is, though, is 2014, that year when I went on that program was actually my best year ever as an agency. We met all the goals. Yeah. We qualified for one of the top achievement level,
you went to the golf course in San Diego.
Yeah, we qualified for that. And the thing is I really realized at the end of the year, right?
Yeah.
That stuff. Who cares about a big trip, right? Like, what did I earn? What did I make? What was the bottom line?
Or you're like, this was a banner year. We didn't grow 15 policies. We grew 38 policies.
It was actually 60.
60 policies.
So I realized, and while we were doing this, I had marketers in place.
Yeah.
We'd call them lead sheets or quote sheets.
Yeah,
We'd print them on green paper, green money. And so
That's funny.
These marketers were doing a pretty good job. I was getting about 12 of these quote sheets a week. 12 to 15 of these would come in. And, we're writing one or two of them.
Yeah, so, right. The conversion's not great.
I'm thinking, man, if I was an independent agent, could I write half of these? Probably, maybe. And the amount of work that was put into 2014, how hard I worked, working, 12 plus hour days.
Yeah. Despite the fact that there was free money and all that kind of stuff.
Yeah. To grow it 60 policies, I'm like, man, there's got to be a better way to do this.
Yeah.
What if I took this same strategy or this same system,
same resources, same bucket of money,
unplugged here and plugged in over here? What would
happen?
Yeah. And of course I ran those numbers out on Excel and I'm like, oh, wow, that's what could happen. So, so that actually 2014 was kind of that blessing, that I stayed.
That's really cool.
Because it opened my eyes.
You had your most amazing year. I think a lot of guys and gals might go, I should stay, but you had the most amazing year of your career and you went, I should go.
It opened
and
my eyes.
And it will help me. I'll do more somewhere else.
I told myself, I do not want to work this hard as I did this year.
Yeah. And for 60 policies.
For a growth of 60 policies.
Yeah, that's crazy.
I can't, there's no way. And I felt staying in that model would be a repeat, right? It's hey, you're going to make a little more, but guess what? You got to hire another staff.
Right.
I mean, so it's just going to always be that grind for slow growth.
Yeah. I think everybody wants to come over. I think everybody dreams about coming over and wakes up in the middle of the night going, I wonder what life would be like as an independent insurance agent.
Sort of.
Whether or not they want to or not.
I think the ones that start to get a little disgruntled or whatever. If you go ask the happy ones, no, they
never think about it or
no. And it's funny. I kind of think of it.
I would argue. Sorry to interrupt your thought, but I would argue even they're just thinking, I love my captive life. I'm never going to leave my captive life. But when I retire, I'll finish my last chapter of my career as an independent insurance agent. So as like a 62-year-old, a 65-year-old, I'm going to do 5 more years as an independent insurance agent because I've always wanted to know what it was. And so I want to flirt with it before it's over. You know?
I almost feel that the captive side and the independent side when you're a captive, it's like comparing somebody that doesn't have kids, right? So
I've never heard this analogy.
You don't know, right?
Okay.
And so you can't go to the independent side and those are the people that have kids and be like, man, do you wish you didn't? Right?
Yeah.
No one's gonna.
Okay, I see. I love this analogy.
No, man, no, I wish I didn't. And the same thing. So it's right. You go talk to somebody that doesn't have kids, and you bring that up, and they think their world is great.
Yeah, they're going, I'm fine. I love my life without that.
Right?
Yeah,
but
that's interesting.
When they cross over, right?
Yeah, they go.
They don't say they want to go back.
Yeah,
right?
Yeah. That's a really good analogy.
They just don't know. You don't know what you don't know, and the same thing happens on the independent side. If we were to go and interview 1,000 captive agents and ask them, hey, you want to go independent?
Yeah,
that ratio is going to be smaller versus go ask 1,000 independents that were previously captive if they would go back.
And they would say, no way.
It's going to be like 90.
Yeah,
something.
I've got beautiful kids. Why would I ever go back?
Exactly.
Yeah. So they bring me so much joy.
That's how I think of it.
Interesting.
You don't
I've never heard that analogy. That's a good one.
They're happy in their current state in their world.
And it's a good state, by the way. I mean, we should say, I know 1 million captive agents over the course of my career. I know 100 of them today. And they're all awesome folks. And they're all killing it in the insurance industry. And they're all having fun. But deep down inside of my heart, I think that most captives are going, I wonder what my life would be like as an independent insurance agent, you know?
Yeah.
You know, they're sitting there going, I wonder what life would be like. So you got your own agency. You just hit a really awesome milestone, right?
2 years. Yeah, it came up on 2 years.
Yep. And your wife's full-time master's degree. You got a little kid that you're running back and forth playing Mr. Mom with, but you're being an amazing dad. You're being an amazing husband. I think your wife might be listening. It's like, he's not that great, and you're crushing it and killing it with an amazing insurance agency
in a pandemic year.
And so.
I launched in 19.
Okay.
November 1 of 19. Okay. And COVID hits in March of 20.
Right.
3 months later.
Right. So I'd love to just kind of like talk about the awesome upside to owning your own business over the last couple of years. You know, the ability it's given you to be an awesome dad, the ability it's given you to be an awesome husband, the ability it's given you to, you know, work from home and control your expenses and yet still grow a totally awesome agency.
Yeah, 100%. Actually, so my wife, who's an amazing nurse, St. Joseph's Hospital downtown, it's always been a dream of hers to go back and get her master's and go on to become a family nurse practitioner. Yeah. And so the position that I'm in to own my own business and have this time and flexibility actually contributes to allowing her to, you know, chase her dreams. So
yeah, that's really cool.
So that's part of, you know, loving the situation I'm in is I can allow her to, you know, go after what she wants and help her get there. Yeah. So, and I love, you know, once COVID hit, I kind of moved operations. I still have an office in the tech center, but you know, most everything is done from home. So now that's allowed me, you know, I'm there with my daughter in the morning. I'm there with her at night. I can pick her up from school 2-3 days a week. And so I'm there around a lot. And so I love working from home for the most part, being an agency owner. I have that flexibility. I can, you know, support my wife as she does that. I can hang out with the little one. It's great. You know, even at previous company, you know, I loved not punching the time clock, right? I loved, you know, if I wanted to hit the gym at, you know, 8 in the morning, I hit the gym first. And I love that about agency ownership, right? Is you have the ability to, you know, catch all the kids' sporting games and, you know, take the trip when you want. So I love that. I mean, there was times, you know, we'd go up to Breckenridge a lot and, you know, get a phone call for a quote. And I remember we're sitting in town, we're about to eat lunch, and I'm like, I tell you what, let me jump on the gondola really quick, knock this out, and I'll be right back.
That's funny.
So yeah, jump on the gondola, take it up. Took me an hour. They bind the policy. You know, I made $500. Jump on the gondola, come back out. Right. So I'm like, well, how do you beat that?
What other industry allows you to do this?
You know, make $500 for the day and 2 hours worth of time. So I love that freedom, the flexibility, the high earning potential, and just to be around, you know, have if I had a full time, my wife might not be able to go do her master's and might be missing a lot of time with the daughter. So I love that, it gives me more time for the family, being that self-employed business owner.
I love it. So let me ask you this. I always say this, when you go independent, your conversion ratio spikes, your retention ratio gets dramatically better, your commissions per policy jumps up, your what am I missing in this equation? Those are the three big powerful variables in the equation.
Yeah, there's one more that I wasn't expecting.
Okay, what's that?
Your relationship with referral partners.
Oh, okay. What about your relationship with referral partners? It gets better?
Oh my God. Greatly improves. When I was at previous company, I lost a lot of
referral partners.
You can only send the mortgage guy your homeowner's quote, a couple times when you're double everybody else, and they don't start.
And they go, I'll go find another guy.
Right.
Okay.
And so, when I was on that other model, a lot of the marketing in those other models, or for me at least, was an outbound, low interest, right? Mailers, telemarketing, cold calling. It's a lot of that outbound stuff, low interest, real high volume activity stuff. You lose, or I lost a lot of the referral partners just because, of rate. And so now on this side, you get a shot or an at bat with a couple of them.
Sure.
And you crush it.
And they go, we're coming back.
Yeah. So that has been one of the biggest things is being able to now grab, satisfy, please mortgage brokers.
Interesting. So we can say commission goes up, retention ratio goes up, conversion ratio goes up. Your ability to please referral partners spikes dramatically.
Yes.
So your ability to get more leads in the front door, more consistent, more leads in the front door goes up dramatically as well.
100%.
Obviously, that equation becomes a dramatically more powerful money-making equation than what a captive might experience.
Yeah, when you improve those things, I mean, that's really what you're trying to do at the end of the day.
Yeah.
As being an agency owner is have a lot of leads coming in.
Yeah.
That you have a high closure ratio on.
Right.
And then be able to retain them at the end. And so that's
not lose them out the back.
You got a ton of leads coming in, and you're writing them, and you're retaining them. That's the recipe for a good, strong, big agency.
Yeah. Well, let me ask you funny stories. Funny stories in insurance.
Funny insurance stories. Oh my gosh.
Only hilarious ones. If they're not funny enough, we're just going to cut this whole segment. So they got to be really, really funny.
All right. One story I thought was pretty funny was when I was at previous captive agency.
Love these stories.
I had a buddy that was working with me at the time, one of my best friends. He was actually the commercial agent or producer of the agency. There was a CSR in there that was kind of on her tail end of, we knew she was going to leave soon. And back then we used to use MSN Messenger to communicate
in the office,
back and forth, and Joe's on the phone and all that. Well, she was on Messenger like all day long, and so we were like, I bet she's talking to someone else or her husband. We learned it was her husband all day. So we created a program. We named the file Noob, and we actually, because I own the computer in my office, and so we went on the computer and we said, have it download all of the track.
Yeah.
And so each night we would, after she'd leave, we'd grab the popcorn and print and print the transcript out.
She's like,
oh my God.
Jeff Holtman, my boss, Jeff Holtman. Such a
read all that. Guys like, my boss just walked in. He's over here talking to me. So we're just reading all this.
Funny.
And so what we were going to do is we were going to print out about a week's worth of it.
Yeah.
Actually, I think we did print them out. We were going to put it in a binder. Yeah. And we were going to have it sitting right on her desk for when she walked in.
On her last day.
I wasn't going to say anything. It was just going to be sitting there and have her read that, and then she can.
And then have her stand up and walk out. Like,
so and she actually left though prior to that.
That's funny.
So that's one. Another is going back to my brother. We you've seen him. We look alike.
Yeah. You guys look a lot alike.
This one was kind of recently. He started reaching out on LinkedIn, a mortgage broker. And they're talking back and forth. He's trying to set up a meeting. And in one of the emails, she addresses him as Hopes, which is my nickname.
Yeah.
I have a nickname, Hopes.
Okay.
So he's like, oh my gosh, she thinks I'm my little brother.
Yeah, right.
And so he's like, well, I still want to take this meeting. So I'm not going to tell her yet. I'll tell her the day before. And the meeting was going to be with her and the mortgage broker's boss. And try to get him at the office.
Yeah.
And so I didn't reach out to her yet. And the day that he was scheduled to go meet them, he tried reaching out to her. He's going to say, hey, I think you have me confused.
But I still want to have this meeting.
Right. He's going to try that.
Yeah.
But he can't get a hold of her. So he's like, oh, crap.
That's hilarious.
So he shows up. They're having coffee.
Yeah.
And the mortgage broker stands up.
She's like, Hopes, how you doing?
And she introduces us.
This is Hopes.
Yeah, this is my buddy Host. We go back.
And, no.
And it was just awkward moment for him.
He's like, I got to tell you.
He had to correct her on the spot.
That's hilarious.
So.
That's good.
Yeah, so there's that one. And the only other last one is I had a deal closed, and I got thrown out of his place of business.
Yeah.
At the very end when he found out. So I went out to this. It was a commercial deal. I was right in this gas station and the work comp.
Yeah.
It was nice. It was probably about
$10,000.
It was about $8,000 or so. Nice little premium. So everything's done. Appointments were just chit-chatting afterwards.
Yeah.
He used to be with the company I was with. He used to be with them.
Oh, okay. So he was an agent for that company.
Yeah.
Okay.
No, not an agent. He was a policyholder.
Oh, okay. Got it.
He'd left and gone somewhere else. So I made the mistake of saying something to the tune of, well, it's glad to have you back at
blah, blah, blah. Yeah, this carrier. Yeah.
And he said, what do you mean? I said, well, you used to be with us. Right? And I said, your agent was blah, blah, blah.
Yeah.
Dr. Jekyll and Mr. Hyde.
Really?
What? That's the same company? Oh my! Just blew his gasket. Started yelling at me. I'm sitting in the gas station behind the booth, the little booth where they sit. There's a client in there about to purchase like Starburst in a Pepsi or something, and he's yelling at me. So he basically hands the folder back, kicks me out of his gas station because he totally forgot that he had signing back up, and he had a horrible story with this agent. So I got thrown out of the gas station.
It's like a story you'd expect from like a 10-year-old, not like a professional insurance agent. It's like, yeah, and so I got thrown out of the gas station.
It was really weird. I sat in my car.
So you tell me you guys were all chummy. Everything was totally cool.
We might have had a golf appointment like the next 2 weeks.
And then within a heartbeat, he was like, get out.
Yeah, it was pretty crazy.
That's insane.
It was crazy.
That's insane. What about craziest claim?
Craziest claim? I don't know about the craziest one. I actually had 2 claims that were in the hundreds of thousands. One was literally client was in a grocery store parking lot.
Yeah.
Had backed out of their spot, and there was an elderly man walking behind the car. Knocked him over. It was like a $380,000 claim.
What?
It went into the umbrella. We had an umbrella on them.
Wow.
Had another one where a client literally was at a red light, was looking left because they wanted to turn right. As they started to turn right, had hit somebody that started to cross the street there.
Yeah, wow.
That's like a $340,000
wow.
claim.
Let me ask you this. Captive carrier that you were at, was there this undercurrent or unspoken thing that said our claims are better than the independent's claims? You would never want to go independent.
100%.
Because they don't do their claims the way we do our claims. Like, is that a thing?
That is a thing.
I've heard that's a thing.
That is a thing.
I've heard so many captive agents go, I've always wanted to go independent, but you guys suck at claims. And it's like, what are you talking about?
Yeah.
Our companies are, multi-billion-dollar companies that take their claims just as equally as seriously as your captive company's claims. So tell me about that.
Oh, 100%. I mean, that was one of the even selling points that we would tell the clients, right? Like, oh, are you sure you want to go over there?
Yeah.
Your claims are, we're so good over here. We were told, we had the best homeowners product. We had the best claims, or one of the best, and so you're told and
you're
taught that.
And you're believing that.
Yeah.
You're going, that's the truth.
And that does make it, back to the transition of, man,
Makes
do I want to leave this brand, right?
Yeah.
Do I want to leave this brand to go with,
yeah,
my clients haven't heard of State Auto,
Yeah.
a lot of them haven't heard of Safeco.
Yeah,
and so do I want to leave this current brand to go that?
What Kool-Aid do captives believe about independence that is simply false? We've already addressed some of them. But,
yeah, we've talked about some of them.
Are there any other, like, Kool-Aid? I drink the Kool-Aid at this captive carrier,
one of the Kool-Aid.
I just absolutely believe it's true.
One of the Kool-Aid things I think a lot of captives think is just because an independent agent has access to multiple carriers, that the independent agent is simply selling and placing business on price. So I think that is a common misconception with captives is it's crappy policies because they're just finding the cheapest one. Well, that's why they can win all the time. They're just finding the cheapest one.
Oh, they're just selling you a crappy policy.
They're
being
trying
fed
to
that Kool-Aid. That, that the reason why the independent agent beat me is because the independent agent sold a stripped down, crappier, less coverage policy.
Yeah, they found it cheaper somewhere, and it's probably so I find that as a misconception a lot. So just you got to educate.
Very interesting.
A lot of times these deals that we're winning, I've doubled the coverage, I've added the umbrella, and we're still coming out, $1,000 cheaper a year or whatever. So I think that's a misconception. And then another one is that these carriers are, back to they're just not good, right? I'm with XYZ captive, and we're strong, we're great in claims, and our brand is strong. They think the independent carriers are just like secondhand stuff, that's not worthy of writing. The policy is inferior.
Isn't that interesting?
Yeah, the claims process is horrible, and you don't have a relationship anymore. It's just you write it, and it's
and somebody's going to forget about you.
Yeah, and independents running the same agency and operation you are. They just have more.
What's really interesting is, and I'm going to do a video on this pretty quickly here, but it's interesting to watch how insurance is distributed by direct, which is like Esurance and Geico, captives, Allstate, State Farm, Farmers, American Family, and then independents, right? And it's interesting to watch how the market share of each one of those three has either grown and shrunk over the last 20 years. So independents, the market share of the market that we represent has grown. Dramatically. The captives the direct has grown very dramatically, and then we've kind of swapped with captives, right? So we've kind of taken the market share that captives have shrank and independents have grown, and it's just been very, very interesting to watch how a lot of captive carriers are just doubling down in the investment in the independent agency channel. So you got State Farm investing in Gainesco, and you got Farmers investing in National General. Farmers investing in MetLife, and Allstate investing in National General, and you have all these captive carriers just kind of investing in this independent insurance agency arm, which is really interesting to me because I wonder at what level the Kool-Aid's being fed. You know what I mean? Because I wonder if at the highest levels of these captive organizations they're going, we have to invest in the independent channel. Right. And then as it gets lower and lower and lower, closer to the actual captive Farmers agent or captive State Farm agent or captive Allstate agent, the Kool-Aid has to be fed to keep the agent in his chair, right? Like, take this Kool-Aid, sit in that chair, and don't move, And I just wonder if the higher you get in those captive organizations, there's less and less Kool-Aid being floated around, and they're going, "This is legit. We have to start investing in this independent channel."
Yeah, 100%.
What do you think?
Yeah, I agree. Yeah.
Okay. How do you fill your pipeline? We're just going to knock out a couple of these real fast.
So how I started, and this is kind of funny going back to the mentality of that transition from captive to independent. In the beginning, I started doing all the things that I was embedded and ingrained into my head. I was
from your captive days.
Yeah, so I came out of the gates, in December, January. probably spending $800 to $1,000 a month in true marketing costs with mailers, and had I was buying aged internet leads and having a telemarketing company call them.
Yeah.
And I was running some Facebook.
Interesting.
Running some Facebook ads.
Yeah. So you're doing it the captive way.
Like, all right, this is what we got to do.
This is an interesting conversation too, because you're describing to me what feels like the captive way of feeding your pipeline.
Yeah.
You know, versus like
right?
the independent way of feeding your pipeline. So keep going.
That's all I knew. So I started doing all these same things. And, we were writing a little bit of business, nothing crazy. It was 20 to 30K a month of premium. Right. But you're getting that, you're trying to ramp up and stuff. Started. So I was doing those activities, and then when March came and COVID hits and everything shuts down, and it's kind of this weird state of things, I kind of pulled the plug back on that stuff. Yeah. Didn't really know what was happening. Yeah. And so over the course of March and April, I said, you know what? I don't have referral partners. I lost them all. Yeah. Let's focus on that right now. At least during these times, I can reach out to friends and check in on them and see how their business is and establish relationships. Yeah. So that's what I focused on in March and April. And lo and behold, remember when like things started to pick? We jumped in quick. Like the real estate market just shot up.
Right back into.
I think everybody was like stuck at home with their family. Like, this house is a little small.
It was like come summertime, we're all like, COVID's over. I'm ready to go.
We need to move. We need a bigger house. What if we get locked down longer? So during that little period, I had reached out some friends, connected with a few brokers and realtors as well. Mm-hmm. And as that business started coming in, I was like, oh, shoot, I don't need to turn on the
old thing,
the mailer. I don't need to do that. And then from that point, my marketing spend was literally zero, other than, a lunch here and there, or a thank you wine bottle, other than that little stuff. Yeah. And we started writing more, double and triple the business that I was prior to with less spend. And so, that is the number one thing I think is mortgage brokers. Yeah. So as an agent, that should be, should have at a minimum 3 to 5.
I totally agree.
On a minimum 3 to 5. And I'm not talking about, your buddy that sells one loan a month, and you want, some of the ones that are producing, 5 to 10 deals a month. And so you got to find those. Very easy to find them. I mean, you got them in your own network. Yep. Facebook, LinkedIn. I mean, you can go do queries and searches on LinkedIn.
I always say, go to church and ask the pastor who the freaking mortgage lenders are, and have him say, oh, he's a mortgage lender, he's a mortgage lender, he's a mortgage lender. Go talk to him before church is over, and take them out to lunch during the next week, and you got yourself one of those 3 at least.
And you probably know more realtors, to be honest, than you do brokers, but you just backdoor, right? You ask for that introduction, which I did a few times. So you got to get those mortgage brokers. That's what fills the bulk of my pipe, is those. And somebody had asked me the other day, well, the 3 or 4 that you have now, have you always had them? Is that who you started with day one? It's actually no.
Were those your captive agent lenders?
As I started,
my question is, why did you lose your captive agent lenders? Probably because of the stint that you did in between, right?
I did a 2-year where I wasn't selling.
Yeah, that's probably why you lost those guys. I
didn't have those.
I was going to say, because most captives leave their captive with their lenders with them, and they come with them. Yeah.
If they have them. Yeah, for sure.
Got it.
So that's the bulk of what kind of fills my pipeline, and every agent should be like right away. Like that's part of your marketing plan is part of your process is, hey, I need to spend X amount of time each week kindling these mortgage broker relationships. With the brokers and realtors. And then it's crazy. The thing I didn't really notice as much on the captive side is the current client referrals. Mm-hmm. I got a couple on that side. Mm-hmm. Well, it's not as sexy when, hey, Sean. Foxy.
Yeah, we use the word foxy instead of sexy. At our house, we use the word foxy.
It's not as foxy if, I put a package together that is a better value, right? I didn't save you money, but it's better, right? You're not as excited, right?
Sure.
Versus if I doubled your coverage, added an umbrella, and saved you $2,000 a year, or $1,000 a year, you're going to go tell, hey, you got to call my brother. You got to call
call everybody.
And so current client referrals. So I got my mortgage brokers, my realtors, current client referrals, and then just my own network, just being, on Facebook,
being who you are,
being around, my dad and I, we joke like, you got to be able to ask, be able to have conversations with people. We'll be at the restaurant and it's a race to see who's going to ask the server who's going to get a shot at their insurance first.